Yeah, we are going to move the approval of the meeting minutes to the end of the presentations. We need one more person here in order to meet our quorum for the committee. So I will want to go ahead and start with the presentation, which is item 2 on the agenda. The MARTA Annual External Financial Audit for FY23. Brad Shelley and partner with Crow LLP. You have the floor.
All right.
Thank you.
Well, thank you and good morning to all the committee members and to General Manager Greenwood. Thank you for giving us a few minutes today to walk through the results of the audit process. I think overall we're very pleased with the results. And so, as he mentioned, my name is Brad Shelley. I'm an audit partner at Crow, work with a lot of public transit agencies across the country, and happy to be able to serve MARTA as well. With me today I have Manager Catherine Brothers. She's worked on the MARTA audit for several years now as well, and she's actually going to kick off the presentation, and then I'll follow up with some additional comments.
Okay, thanks, Brad. You can go to the next slide. All right, so we have our first few slides here, and it's really just going over the objective of the audit as well as timing and the scope of our work. As always, the objective is to express an opinion on the presentation of the financial statements that are prepared by management, and our scope of work entails obtaining reasonable assurance about whether those financial statements are materially presented correctly and free from material misstatement, whether that be due to fraud or due to error, and then we issue an opinion over those findings. 2 items of note that were kind of the big topics this year were the new accounting standards, both GASB 94 and GASB 96. GASB 94 surrounded public-public and public-private partnerships as well as availability payment arrangements. There ultimately was no impact to the financial statements as a result of GASB 94, but we did have to do testing over management's assertion that it had no impact, review contracts, and we found that we agreed with their assertion that there was no impact. GASB 96 is one that we've been talking about for several meetings now. It's the Subscription-Based Information Technology Arrangement, or the SBITA guidance. So very similar to the GASB that was implemented last year, GASB 87 over leases. However, this is looking at those IT arrangements that would result in a subscription-based asset or liability to MARTA. So there was an impact as a result of that. MARTA implemented this as of 7/1/22, the beginning of the fiscal year. As a result, there was about a $1 million reduction in prepaid assets, $9 to $10 million increase in the right-to-use SBITA assets, and then also an $8.6 million increase in the liability. Ultimately, no net impact as of 7/1/22. However, there was an impact to assets and liabilities by the same amount. Next slide. So the audit approach really is divided up into 3 different sections. First of this is our interim fieldwork, which would have coincided when we were last here to present to the board. This is usually done in the late spring. During this time, we're doing planning procedures, discussing with management about big changes from the prior year, and really doing a lot of our internal control testing. So, ensuring that there's proper sign-offs and approvals. This is also when we're going to begin doing our single audit testing. And then we do wrap that up during our year-end fieldwork, which this year ran from about mid-August through about the end of September. During this time, we're completing those single audit procedures and really diving in to do our substantive testing over the year-end balances. That's when we're looking and diving in and doing the testing of the actual numbers that are being presented in the financial statements. This is also the time where we do the NTD testing, which surrounds MARTA's submission to the National Transit Database. And then finally, what brings us to today is the last phase of the audit, which is reporting, in which we do get a draft of the financial statements from management and perform our review on them. Start to prepare those audit opinions, as well as our compliance reports in relation to the single audit, as well as the NTD submission, and then finally reporting those findings to the audit committee today. All right, next slide. So as always, the audit does include consideration of fraud. We do have to keep, our auditor skepticism in place throughout the entire audit in order to, test to see if there is any fraud that we find at any transit organization. So we do have bullet points on here on what some of those general overarching fraud considerations are. These include things like inquiry, doing fraud risk assessments, and really looking at, analytical procedures to see if, there's any unusual relationships that we identified, any odd changes year over year, as well as looking at all of the data we're collecting throughout the audit. As noted here, none of those tests resulted in any fraud, so we did not identify any fraud as a relation to those tests. This section of bullet points here is some more detailed tests that we might do over journal entries, looking at accounting estimates, and also looking at any new, significant, unusual transactions that might have occurred during the year. And as with every transit organization, revenue is usually the highest risk area as a potential for fraud. And as you'll note on the slide here, as a result of these tests, we did not note any fraud as well. Next slide. So we have detailed here what our audit deliverables are. The slide is kind of broken up into 3 different sections. The first section up here has 3 bullet points, and that is all of the deliverables that are related to the audit of the Annual Comprehensive Financial Report, the ACFR. First is that independent auditor's report. That includes our opinion over the financial statements, a management letter in which we would disclose any material weaknesses or significant deficiencies, if any existed. None existed during this audit, so it's a pretty clean letter there. And then the SAS 114 letter, which is some required communications to management and the board, which we'll go through in a little bit here. This middle section here is over our compliance reporting, specifically the single audit. So there are 2 opinions that are issued over the compliance report. Again, both are going to be clean opinions for this year. And then we also do issue a opinion on the CFA, the Schedule of Expenditures of Federal Awards, in relation to how it's presented with the financial statements. Last 2 items on here, one is an agreed upon procedures report for MARTA's submission to the National Transit Database. And the last item is the one that is still in process, as it is the electronic certification on the data collection form. So once the audit is finalized after today, all that information will be uploaded to the Federal Clearinghouse, and we will certify that single audit related information. All right, next slide.
Thanks, Catherine. These next few slides are just going to go through some of the financial highlights. Didn't want to get into too many details, but wanted to cover a few things here. So as you look on this slide, this is your statement of net position or your balance sheet. And again, just looking at the higher overall categories of assets and deferred outflows, liabilities and deferred inflows, and then net position, which is similar to equity. We put 3 years of information here. I think that's just helpful to understand trends and see kind of how things are going. So as you can see, starting on the left-hand side, the assets and deferred outflows, that has made some slight increase there. It's hard to tell on this, especially if you're further away. There is a slight increase there. Last year was about $4.6 billion, up to about $4.75 billion in assets and deferred outflows this year. So deferred outflows and deferred inflows are similar. They're essentially transactions that will be recognized in future periods. So most often it's associated with pension and OPEB. So maybe it's with pension and OPEB specifically, some of the changes in those transactions are not recognized in 1 year. They're recognized over a period of years. So for example, with some of the changes in assumptions, some of the changes in investment valuations, those types of things that impact your net pension liability, your net OPEB liability, those are often amortized over a period of time, more than 1 year. So those changes kind of set in the deferred inflow or outflow and then get recognized over time.
You're not recognizing it as part of this financial report, you're just acknowledging something's going to happen.
Well, it's Yeah, so when I say recognized, it's not recognized on the income statement. So it's not recognized as a gain or a loss
Okay,
on the income
okay.
statement.
Makes sense.
It's just setting there, similar, if you think about like a unearned revenue or a deferred revenue, where maybe you've received dollars, but you aren't recognizing as revenue yet for whatever reason. It's a similar type of approach there. You're not recognizing the gain or loss from the pension and OPEB activity in this period. It's going to be recognized over, a 3-year, 4-year period, something like that.
This form here, the only place it shows up?
Yeah, and on the financial statements. It's on the financial statements. So when you look at the actual financial statements, there's an assets section, and then immediately below there's a deferred outflows section. And just from a grouping standpoint, it's sort of similar to an asset, so we group it with the assets here. Yeah, right. It's hard to explain. It's one of those kind of accounting types of transactions. These are new in probably the past 5 or 6 years, if I remember correctly. Previously, it was just assets, liabilities, and net position. And then, of course, the accounting standards makers decided we need to have new categories. We need to have deferred inflows and outflows.
Okay, okay. And I have a question when it comes to assets. Are the assets basically value with current value of assets that we have? We have quite a bit throughout this enterprise. Is that how you evaluate?
Yeah, generally speaking. I mean, so like your cash and investments, and those are going to be at fair value. Your capital assets, which makes up most of your assets.
Yeah, capital piece.
I mean, those are going to be at net book value, so
Okay,
your
that's what I'm
historical
looking at.
cost less accumulated depreciation. So it kind of depends on the asset on how it's recorded there, but
Okay.
sure. Any other questions before I move on? That's very technical terminology there, sort of, right?
I understand that.
Liabilities and deferred inflows, again, similar type of transactions there. The deferred inflows are similar to a liability. Those are just going to be recognized in future periods as well. See those decreasing, which is obviously a positive trend there. So those decrease from about $3.3 billion to $3.1 billion. The caveat I'll always add to both of these, I mean, it happens to be going in the right directions this year. As you may recall, and if you look at your financial statements in more detail, within there is the net pension liability and the net OPEB liability. Those are always subject to change year to year based off of the market returns or losses and or assumptions changing, discount rate changing. So those can have a dramatic impact on your assets and liabilities year to year. I just always want to make sure I'm mentioning that because it's such a significant part of that. Then your net position, again, is the difference between those. So you do see an increase there from about $1.3 billion to about $1.65 billion. So positive trends there for sure. If you go to the next slide, this is your statement of revenues, expenses, and changes in net position. Just a little higher. Or your income statement. On the left-hand side, again, it's a little bit hard to see, and it doesn't look like significant changes there just because the operating revenues are pretty small in comparison to your expenses, your non-operating. But there's actually been some pretty significant increases as you started to see ridership come back over since COVID. So from FY21, which is represented in the gold there, that was at about 57 million. Increased to about 72 million in FY22 and then up to 81 million this year. So again, not huge dollar amounts, but percentage-wise, some pretty good increases there. As you look at expenses, obviously increased pretty significantly this year. A variety of indicators there. Obviously, inflation has something to do with that, some rising costs in different areas. As you continue to increase ridership, increase service, you're going to have increased costs there. So again, a number of factors that contributes to the increased expenses. Your non-operating revenues, pretty consistent there. A slight increase from FY21 to 22 and then pretty similar this year. That will potentially change is the COVID funding related to your federal dollars goes away. So you might see some increase or some decreases in your non-operating revenues there, unless you're able to identify and obtain some other grants. The capital grants, again, that kind of just fluctuates depending on the year and what capital activities you have. So a slight decrease there, but nothing significant. And then your change in net position is essentially your net income. This year it was down to about 123 million, but I think the biggest thing is it's still positive, right? So you're not having decreases in a change in net position, which we are seeing in some cases with some transit agencies. And again, that'll be something to monitor as you move forward and you have less of the COVID dollars available. Any questions on those couple of slides with a little bit of numbers before we jump into the last bit of communications? All right, so if you go to the next slide, these next few are just some required communications, and these are all included in the SAS 114 letter that Catherine referenced previously, but I always think it's helpful to walk through this in a little bit more detail just so you understand what we're communicating here. So first one is that we are communicating that we're independent of MARTA, which is obviously very important. We're providing an independent auditor's report, and if we weren't independent, we couldn't provide that report. So we don't have any other type of relationship with MARTA that would impact or impair our independence. From the accounting standard, we did have the one implementation of GASB 96, which Catherine mentioned, so I won't go into detail on that. Management judgments and accounting estimates, nothing really too significant here other than the last bullet point. The first 5 bullet points are all the same. The 6th bullet point, there was a change in the estimation of the calculation of accrued interest related to the leases. This was something that was required to be changed because the lease software that you were using, they changed it for you. So essentially they changed how they were calculating, how they were compounding the interest, which impacted your interest calculation. So didn't have a material impact. It had a pretty significant impact, but it wasn't material. And again, it was something that was really kind of forced on you based on the software you were using. The last section, auditor's judgments. These are just some of the things we look at here as part of the audit process, whether the accounting policies are appropriate, whether there's any kind of issues with financial statement disclosures, anything along those lines. Nothing that we noted there from a negative standpoint. If you go to the next slide, corrected and uncorrected misstatements. We did have one corrected misstatement. This was related to a lease agreement, and this was a little, I'd say, very unique situation where you had entered into this lease agreement, signed the agreement prior to the end of the fiscal year, but you weren't actually able to take over and utilize the space. The lease hadn't actually commenced yet. So even though the agreement was signed, the lease actually hadn't started. And so management had originally recorded it thinking, well, this lease agreement has been signed. But when we looked at the details a little bit more, it was the lease hadn't actually commenced. So as a result, there was about $1 million, $1.6 million increase to the change in net position. Really, there were payments that were required to be made, again, even though the lease hadn't been commenced. Those lease payments are just part of a prepaid. So very relatively minor adjustment there. Again, only about $1 million impact, and very kind of unique agreement.
Got a question on that one there.
Yeah.
I know that when we, a couple of years back, we talked about the new changes when it came to leasing agreements and how they were going to be a part of the scope.
Yeah.
And I know we talked about the software that we were using to do just that. So in this situation, are you saying that there was a lease agreement, I'm going to make sure I understand, and that they started prepaying on this lease agreement, but in your eyes, it hadn't been commenced at that point, so it should have been delayed as far as being a part of the requirements of lease, of being leased?
That's correct, yeah.
All right.
And the software really can only do so much, right?
Right.
So and there are definitely instances where you may have to prepay on a lease, or if you're the lessor, maybe you're receiving payments in advance. So that's not necessarily uncommon. I think it was more of the timing. Oftentimes the lease agreement is signed
Yeah.
pretty close to when you're going to start. And I think it happened to be just this was towards the end of the year, and the lease period hadn't started, even though you'd signed the lease.
Okay, so, but in your audit expectations, when does it commence? When the lease is paid, or when the lease is
When
signed?
the lease term actually
Okay,
begins.
when the term?
Right.
Okay,
Yeah, it's based on the lease term.
all right, when the term?
Yep.
Okay, great. Okay, thank you.
We had no uncorrected misstatements, so those would be, adjustments or misstatements that we identified that management chose not to post. We had none of those, so clean from that standpoint. Again, no significant deficiencies or material weaknesses in internal control. I think the dollar amount of the lease, it wasn't significant, so while we verbally discussed that, we have a deficiency in internal control there, but it didn't rise to the level of a significant deficiency or material weakness. So that is good as well. And then this last section here of other communications, this just goes through a variety of information. I would say all of these are not an issue. So if you read this, significant difficulties encountered during the audit, disagreements with management, we did not have any of those. So I think that is something to note. Just wanted to make sure it was clear because it can be a little misleading looking at this slide potentially. And then the fourth from the bottom bullet, the representations the auditor is requesting from management. So that is actually the one when you look in the, if you look at the actual letter, it's more in the affirmative. The response is an affirmative saying there's a letter related to this. So that is a letter that will be signed by management and really goes through a list of it's about 5 or 6 pages long. I think goes through a lot of the information. And essentially what we're doing in this representation letter is asking management to say, yes, we've provided you all the information you requested. We're not aware of anything else. We're not aware of any other fraud. We're not aware of any other transactions, any other legal issues that may be out there. Essentially, we've given you everything that you need to be able to complete the audit. And it's kind of just that final step in confirming that. So standard part of the process, but I did want to point that out because it's affirmative and it does have a lot of items in there. And again, that's standard for any audit that we're doing. So that'll be signed soon, and that'll be dated the same day as the audit report. Last slide. Excuse me. The last slide here is just, again, we always try to go through and give you a heads up on what's coming down the pike from new accounting standards or other issues. As you can see here, there's a couple of new accounting standards that will be in place for fiscal year 24. I don't anticipate either of these having any impact whatsoever on your financial statements. We'll go through the omnibus with management, but I don't think there's anything in there that's going to have any impact at all. The omnibus is kind of just I'll call it a catch-all. It's kind of some very minor things that typically don't affect very many entities, but may impact a very small few, and so they compile those and put it all into one accounting standard. GASB 101 related to accounting changes and error corrections. Again, that would only impact if you do have a change in accounting procedure or principle, which would be different than this year's change in accounting estimate, or if it was error correction. So if we identify an error, a misstatement or something from the prior year, that this GASB could potentially come into play, but I don't anticipate that being the case. GASB 101 is related to compensated absences, and really that standard I don't think will have much impact, but really what it's trying to do is trying to make it more consistent for government agencies on what types of employee leave is accrued versus not accrued. So it's just trying to clarify a few things in there. Again, it's mostly at some unique types of leave that maybe only a few agencies have, so I don't anticipate anything there. I didn't put it on here because it's not actually a statement yet. There is likely going to be a new statement coming this spring or summer related to the financial reporting model. There will likely be some changes there that impact MARTA. I think right now the most likely is that'll be a FY25, maybe FY26 implementation for you all. The biggest changes will be in the management discussion and analysis, or MD&A section, which is immediately before the basic financial statements. There's some proposed changes in there in what's required to be presented and not presented. So just to keep you in the loop, that's out there. Not actually issued statement yet, so I don't know exactly what they're going to have in the final statement, but that's something that'll potentially impact you in the next couple of years. And that concludes our presentation today. So again, happy to answer any other questions you might have, but that covers everything from our standpoint. And I did want to just mention, thanks again to the accounting and finance team, Cynthia and all of her team. Did a great job, again, presenting or being prepared for the financial statement audits, compliance audit. I know we boil this down to whatever this is, 20-minute presentation. It takes a lot of time. We ask for a lot of information. There's hundreds of requests that we're asking for them, both from financial statements and grants and et cetera. And so they have consistently done a good job in preparing and providing that information to us timely, so that we can meet this timeline. So thank you to their team.
I appreciate it, Brad. Thank you, and Catherine, for all you do. Appreciate that. Board members, any questions? Jim?
Thank you for the report. And Collie, I think I already congratulated the organization for a really great audit report. So the next steps here, do we accept this on behalf of the audit committee and present it to the board on the 7th, and then that is when you would send the report that you need to send?
So,
or does this body then just, it's okay then to send it in? Because you had a to-do at the end, which is, write the letter.
the data collection form. And
Yeah.
I believe in the past, this committee has accepted or approved, I don't know exactly what you all do for sure there, but we are typically finalizing after this committee approves it.
Okay, I'm just curious about that. Secondly, which relates to, the congratulations, I think it's really important to communicate to our stakeholders that this has been done and that it was a very good report. But when you do that, a good number of our stakeholders are probably aware that there's this audit that the city of Atlanta is doing, and maybe that would create some confusion or something like that. So I'd love to be able to shout from the mountaintop, we do things right, and but I want to do it in the right way so that people recognize but don't get confused. So that's all I wanted to say.
Thank you, Jim.
All right. Al? Mr. Alpine?
Brad, I recall the 22 audit was pretty similar as far as it was a clean report, no major deficiencies or material weaknesses. If there was anything left over from 22 that needed to be corrected, that's one of the things you follow up and would point out, correct?
Sure. Yeah, for sure. If we had audit adjustments or if we had findings, deficiencies from a previous audit, yeah, we go through that with management to see whether those have been resolved or not. But as you mentioned, we didn't have any findings last year. Last year was a clean audit process.
I thought it's pretty standard if there's something that needed to be handled differently.
Yes.
You identified in 22, you would point that out if it wasn't corrected in 23.
Definitely, yeah, because that's when you start to maybe have some more concerns, right? So if you have recurring issues that haven't been resolved, that would be more of a concern. There's always a possibility you have, like this year, you had an audit adjustment. I don't view that. You have one audit adjustment out of, probably millions of transactions. It's more when you have the same issues creeping up year after year after year, that's when you become a little bit more concerned, or I would be if I was, sitting on your side.
That's not. I'm sorry.
I don't know if I would put that in the headline. Just to clarify, we don't audit all of those millions of transactions,
But it's a lot.
yes.
Good. Bill?
Well, we're going through a CFO change here. Is that something you look into, or is it any kind of statement of that required as part of this report?
Not that goes into the report. So it does play into the audit process, I would say. So we'll typically have a discussion with the CFO. So obviously once you transition, have a new CFO, we'll have discussions there as we move into next year's audit. We will typically do a background check. I know you guys, I'm sure, do background checks, but we do as well, just to identify if there's anything from our standpoint that might be a red flag or a risk that we need to be thinking about from an audit standpoint. So yeah, there's some things that we do around that, but it's not something we would report in here, and it typically doesn't have, a significant impact on the audit procedures.
But there won't be any notice about that as part of this report at all, or this?
No, I think the only time it would potentially have an impact is if, because of turnover, you had some internal controls issues, right? So if the CFO was out and you didn't have somebody else in there sort of as an interim, and they weren't doing reviews, or they weren't, whatever the different controls are, if there was a gap in those internal controls, then yeah, that might be something that we would report. But as long as there's not, as long as you have somebody in the interim fulfilling those, and there's still segregation of duties, which there typically is, and that's my understanding is that there are, then we don't have anything to put in the audit report related to that.
So the lack of any of that kind of statement or anything in this audit report is a good indication that none of that happened, right?
Well, this report wouldn't have it anyways, because
Okay.
this was only covering through June 30 of 23.
Okay,
Next year's would, potentially.
okay. Thank you.
And I would just add on that, in our unique situation, the change of a CFO it's important, but the fact is that our interim CFO has been there all along, was in fact the interim CFO during the last search, and maintains a strong position. And even during Raj's tenure, one of the things he had, as top of mind was strengthening his existing team. So our existing interim CFO's even stronger today than he was when he fulfilled the role previous. Yeah, yeah.
I think any other comments from the board members? All right, well, thank you for your presentation. We appreciate it.
Thank you.
Thank you very much. The next item on the agenda is an internal audit activity briefing from Emil, AGM Internal Audit. You have the floor, Mr. Emil.
Thank you very much, and good morning, Chairman Frierson, Mr. Greenwood, members of the MARTA Audit Committee, and MARTA Management. My name is Emil Zanov, the head of the internal audit function at MARTA. Thank you for the opportunity this morning to give you a brief overview of the internal audit activities for MARTA's fiscal Q1 of FY24. Let's go to the next slide. As we normally do, I would start with the operational audit group. During the first quarter, we worked on two fairly significant audits. The first one was completed. This was a DOT physical and drug testing process audit. It was a clean audit with no significant finding, and only one moderate finding, which was really related to a process improvement as it relates to various different physical medical forms. But I'm fairly satisfied with the way the process is running at MARTA as it relates to the compliance with federal laws related to drug testing and alcohol testing. So no significant findings there. The other very significant effort on part of internal audit was an audit of the MARTA Employee Charity Club. This was an audit that I had to add to the audit plan. This was not on the original audit plan. This was communicated to you in May. However, we received a complaint on our fraud hotline, and after reviewing the complaint and other relevant materials, I made a determination that it would be prudent to do a full scope audit of the MARTA Employee Charity Club. At the end of the quarter, at the end of September, we were still writing the report. However, since then, we have concluded the report, and we have communicated the findings both to the charity club leadership as well as MARTA management. So I'd like to take a few minutes and give you a quick summary of this particular audit. This audit, when it's issued, will be rated high risk. The internal audit team, through a lot of diligent work, identified a very large number of what I would call severe deficiencies in the operations of the MARTA Employee Charity Club. Those include failure to comply with federal laws, failure to comply with state laws, and also failure to comply with the agreement between the charity club and MARTA. The charity club was established in 1954, just to give you a little bit of a context. In 1992, there was a formal agreement signed between MARTA and the charity club that regulates how MARTA withholds from the employees whatever they designate as their charitable contribution, how those money goes to the charity club, what kind of things, procedures, processes, and controls the charity club has to have in place in order to maintain that agreement with MARTA. A lot of employees participated in the charity club because the MARTA populations is, I would say, they're a charitable group of people. They want to support the community. They want to support each other as well. On average, in the last 5 years, which was the scope of the audit, MARTA employees were donating approximately, it's different year to year, but approximately $450,000 a year. You know, it's quite a significant amount of money. These were pre-tax contributions, and the charity club was registered with the IRS as a charitable organization. Okay, so during the course of the audit, we identified failure to comply with federal, state, and the agreement with MARTA. We identified the fact that the trustees were paying themselves and receiving or giving themselves other forms of compensation in contradiction to the agreement with MARTA and in contradiction with their own bylaws at the time that were in effect. They failed to give themselves a 1099 form for those money that they received or W-2. They're not employees of the charity club, they were trustees, so they failed to comply with tax laws in that sense. They failed to file, they did file 990s, but those 990 forms with the IRS were not accurate, especially in the areas of the compensation that the trustees were receiving. They diverted funds and revenue from a golf tournament that they hold every year to a separate bank account. That bank account was under a different organization name, which was not registered in the state of Georgia, which is a big problem from an audit perspective. They delayed funding the charities designated by employees by several months in order to cover their operating shortfall because they were, you know, having significant expenses related both to paying themselves as well as other administrative expenses. They also had a number of other accounting deficiencies and internal control deficiencies. Just way too much to take up the time today to go over the details, but happy to answer questions. The findings were communicating to the charity club and to management. A letter was delivered to the charity club to that effect. And they have responded with a short paragraph that they will distribute the remaining funds to the charities that they were designated by the end of the calendar year. In my professional judgment, as the head of internal audit, I have to say that MARTA management took immediate, prudent, and responsible actions immediately after receiving the audit report. And I do believe that those actions have been in the best interest of the authority and the MARTA employees. This is kind of a very brief summary of this audit. So maybe I'll turn it to Peter.
Sure. So after receiving the report, we made the determination that it was in the best interest of MARTA to terminate the agreement between us and the charity club so that no further deductions would be made from employees' payrolls, because we were not confident, based on what we had seen, that the money would be delivered and used properly. So at this time, we're not going to have any kind of contractual relationship with the charity club, and we will look for other avenues to provide our very charitable employees the opportunity to continue to give to some of their charities.
Is this money still being taken from the employees of MARTA Holdings?
No, sir. At this time, there's no deductions coming out of employee payrolls until we have another method to then distribute it in the manner they would like. So we stopped withdrawing funds, I believe, in August or September when we had the initial meeting with Emil's team, and we had some concerns at that time, so we stopped withdrawing at that point.
So we still have the, warming the heart and stuff the bus, things that, as Emil said, that this is a group of employees that want to give and support the community there. So there are still opportunities to do that. We're thinking about and investigating opportunities with the United Way to make sure employees still have that. And Emil, I think did you identify in the beginning that this was first brought to our attention through the fraud, waste, and abuse hotline?
That is correct. There was a complaint through the fraud hotline.
So I just want, I wanted to establish that again is an ongoing opportunity, and kudos to that program, because that gave employees the opportunity to sound the whistle in the first place so that we could even be aware of this stuff. So okay, that's the whole picture.
Thomas Worthy's next, and then Rita Scott. And then I'll come
no,
back
go
to
ahead.
Bill.
Well, I guess my question is this, do we need to call the sheriff here? Is this something that we?
That was my question. Is MARTA police involved? I mean, it seems as if there's criminal activity here.
So, candidly, we had conversations with the Attorney General's office when this first happened, and we had the initial investigation. Their advice would be to refer this to the IRS and let them address it. There's nothing, and I don't want to speak for Emil's team, there's nothing to suggest that, well, let me not say that. It's going to be investigated by the proper authorities. We're going to send it off and let them handle it.
Okay. Rita Scott?
That was part of my question, but also, so the contributions made by employees, all contributions went to this one specific organization. There weren't choices for the employees to choose if they wanted to donate to the Cancer Society or various organizations. That wasn't an option.
Good.
So when an employee signs up to donate, they have an option to designate a charity or multiple charities, and then that information goes to the employee charity club, and they're supposed to send a donation to that charity. For example, many employees donate to churches, food banks, or some of them send the money to United Way anyway. But there is an option, and that's what happened. Now, there was another option, and for example, some employees chose not to designate their money to a specific charity and let the charity club use the money at their discretion to whatever charitable purpose they see fit at that point in time. So
those that chose a specific organization or charity, the funds were directly submitted to that charity, but those that did not, or those that chose the charity club, those are the funds that were submitted to the charity club.
So no, all the money and all the funds would go to the charity club, and then the charity club will carve out the money to Atlanta Food Bank, United Way, the church, and et cetera, et cetera. The charity club would do that work,
Distribute it directly.
that disbursement, correct?
Rita, were you asking if I designated to a specific area, did the charity club do that, or did they hold all of the funds and misappropriate all of the
No, they did distribute the funds to designated charities.
Yeah.
To designated organizations.
Correct.
Correct. Okay.
Yeah, so my understanding, Emil can correct me if I'm wrong, is it did get to majority, if not, well, I'm going to say a majority because I think there was a couple we weren't sure of, that it didn't, majority of those charities did receive it. biggest issue was the timing, because there would be shortfalls every December when they were supposed to, when they were making these payments, because salaries were covered, and they had to make up in the next fiscal year the difference. Is that accurate?
That's correct. So there was a delay in the disbursement. They were supposed to disburse it after the end of the year, calendar year. But the disbursement usually were delayed by several months because of that kind of, lapping and generating new money to cover, operating expenses that was were as high as 30% of the donations.
And I think you may have even seen this with your own eyes if you looked at, or if you went to the toy giveaway that the authority does every December. It's kind of dropped off significantly in the last 2 years. This probably played a huge role in that. And so because of our terminating the agreement, we're not going to have that this year. But as Mr. Greenwood mentioned, we are making a very strong push for the Warming Hearts Initiative and the Stuff the Bus to make sure that something is given to those in need. And we will have a more robust plan for the next year.
So then I take it that for 2024, we are not having a charity fundraiser through the employees. Is that correct?
We're not deducting, MARTA as an institution is not deducting from the payroll of the employee any charitable contributions for the charity club. That's correct.
Yeah, and as Mr. Greenwood mentioned earlier, we are in conversations with Milton Little at United Way about having them come in and be that repository, if you will.
Thank you.
Okay, I believe I have Jim on here currently, Jim, and then.
So the trustees are MARTA employees, right?
In most cases, they were. I don't know if any of the, I think one of them was still an active employee.
One of the trustees is an active employee, and the remaining trustees, including the chairman and the treasurer, are retirees. They were former employees.
Okay. That makes my second comment moot.
Okay, Bill, you want to the mic for us? Yeah.
Is this an organization set up solely for MARTA employees, or are there other entities participating in this group?
This organization was set up just for MARTA employees.
Okay, so that's why it's the trustees and all that. Now, all right, on behalf of the employees that are not trustees, is there an opportunity for MARTA to ask for some of this money back on behalf of the employees?
It would be almost impossible to recoup any money. There is a small amount of money left, and I use that term very loosely. It's probably a lot. It's probably bigger than a small amount that they will be donating to those charities that were designated by the employees the first week in December. But to recoup this money would be, it's almost trying to get blood from a stone. So I don't think we would have much success. And candidly, it's not going to be of any benefit to us or the employees at this point. I think we do, as Mr. Worthy and you were suggesting earlier, and let the proper agencies handle it from here regarding the violations attached to the 1099s and the 990s.
Okay, and if I understand, there's no MARTA money involved in this, just employees' money, is that all?
Correct. And, again, the employees gave the money to be used for charitable purposes, and in most situations, when you look at the overall amount that was given, that's exactly where it went, but there were some significant deficiencies in other areas.
Okay, last thing, is there because of the nature of this thing, is there a public reporting requirement based on the audit that we've done? Or do we?
This is pretty public, and the findings are, a public record. And, like I said, we have been in touch with multiple agencies at the state and federal level to let them be aware that this is coming and
Okay.
how they want to handle
Well,
it.
I'm thinking more of the employees whose money's been taken or been withdrawn over the last few years, are they due some sort of report on what's happened to that money? Is that MARTA, does MARTA have a responsibility to do that?
So I believe Ms. Mullinax has been in communication with, both the union side and the non-union side, that the termination of the withdrawals have happened, and we'll manage and let the employees know what the plan is for next year and explain what's happened when the time is right. We didn't want to get out in front of you all getting this report, so that report is forthcoming, if you will. So to answer your question, yes, we're going to do something. Is it required? No, but it's in good form to do it, so we're going to do it.
Okay, and this would be something to be reported to the board in total, right? At some point in time?
Just like the normal audit requirements or audit findings, we'll treat it just like all the other ones. Any agreement we come to, if we do with United Way, will obviously come before the board, and at that time, if there's more questions, we can answer it. But I don't intend, I wouldn't recommend treating this different than any other audit. So if we have audit findings, it gets reported to the board the same way that all the other audit findings do.
Okay, this is the only thing we got going on that might fall into this type of situation. Is that correct to assume that?
I would never assume anything like that, just because, this is the one that we had findings on. There could be something else out there that we're not aware of. But if it's reported, I am confident that our audit team will, dig as deep as they need to figure it out.
Okay, thank you.
Okay. All right, any other comments? All right, Mr. Mill, you can continue.
All right, can we move to the next slide? These are prior operational audits that we have discussed in the past, so I'll treat this in a very summary fashion. I just want to point out a couple of audits: the excessive absenteeism investigation and bus operator availability. Those findings have been closed and completed, so good news there. The same thing with the non-revenue vehicle audit. Those findings have been remediated. We had good progress in the capital improvement program follow-up, which is the first line on the slide. There's 21 of the 28 findings closed and 7 are in process because this was just a humongous audit, and we're continuously or periodically working with Carrie and her team on checking the progress against those remaining 7 findings. Next slide. And this is the second page of the prior audit findings. Overall, when we draw the line and look at the bottom line, I shouldn't say we, because it's really management and the authority, closed 34 significant findings during the period, which is a significant improvement over 24 that we had at the end of Q4 of last year. So during the previous audit committee, we had 24 closed. Now we're at 34. None are reported as past due from a significant finding standpoint, and we'll continue to work with the management of various different operational units to make sure that we are making progress and we're reporting that progress to the board. And I'm sure that the CT members here will attest that they're probably getting sick and tired of seeing me every now and then, but that's just the nature of the process. Next slide. IT audits. The IT audit team within the Department of Internal Audit worked on 3 specific projects. The first one is still in the reporting phase. We'll issue the report this quarter and we'll report it at the next audit committee meeting. The second line is IT hardware asset management. That audit was marked as high risk, 1 significant finding and 4 moderate findings. The reason this process, IT hardware asset management, is very, very important is because it's a foundational process. If assets are not carefully and exactly accounted for, and when I talk about assets, I talk about laptops, desktops, servers, switches, firewalls, other IT equipment, if we don't know exactly what it is, where it is, and what it does, we can't install security updates and keep it secure and protected. So this is a very foundational process that we had to take a look at. There's some things that are working well there, but there's some things that really, really need to be fixed. The same thing applies to the enterprise penetration test remediation findings on the second line. There were a grand total of 3 vulnerabilities that were what we deemed significant in nature. 1 was closed, and 2 are still in the process of being remediated. I'm actively working with Rhonda and just the new management team within that organization to get them up to speed. I think Rhonda has been very, very receptive to our conversations, and I think we'll make good progress going forward as we have in the past. So just a little bit of a transition period, but we're meeting, we're handling that. Let's go to the next slide. There's some prior audit findings from prior audits. There are 13, or at the end of the quarter, there were 13 past due findings in the IT space. Again, I've met with Rhonda, had discussion with her about the nature of those findings, and I'm confident that we'll make good progress going forward. The middle of the slide that says TCSN pen test remediation findings, these were really in the operational space, and George and his team have been communicating with me what they have done. I reviewed that communication and evidence. We've had a meeting, and based on that evidence and meeting, I'm satisfied that whatever was reasonable and prudent to be done has been done at this point in time. The remaining residual risk, without me going into technical details, I think the remaining and residual risk is very, very, very unlikely given the technical nature of the risk, which I know what it is. But in my opinion, and just trying to kind of keep the audit committee, relatively comfortable that we're closing those 6 remaining findings in the middle without exposing the authority to undue residual risk. And we'll be working with the rest of, again, the new management team over IT to close these yellow things and move them forward. Okay. Next slide. Moving on to the contract audit group, we issued 23 contract audit reports, pretty busy quarter. The good news is that they were pretty clean. We only identified $31,500 in unsupported cost in various different cost price analysis. These were actually two procurements when we did cost and price analysis with very minor percentage of unsupported cost as part of the overall cost proposal. I'll give you an example. 19 of the $31,000 was on a $4.4 million procurement. So, just as a percentage, very, very minor, but I have to report it, so it's on the slide. And we exited the quarter with 20 contract audits in progress. So we're running as fast as we can with that team to support the authority and support the procurements, because as you all know, all single source, all sole source procurements have to come through audit, various different overhead rates. So we're busy all the time, 100% of the time. Let's move to the next slide. The fraud hotline, we did not receive any new reported allegations during Q1. We handled the 4 different allegations from the previous period. The first one we talked about extensively, that was the charity club. The next one was an operator who claimed unfair treatment. That was referred to labor relations and operations because he had nothing to do with fraud. The third one was an employee who moved out of state. There were allegations about inappropriate action. That investigation was referred to legal and human resources. And based on my conversations with the appropriate organizational leaders, AGM and legal, there were no laws or organizational policies that were breached at the time, so we closed that investigation from an audit perspective. And then the final one was a report that had very, very, very scant details, so we just could not investigate because we just didn't have enough to go on. So we could not substantiate the allegation. Next slide. This slide captures other internal audit updates. They're mostly forward-looking. I just want to kind of go and do a quick reminder about the MARTA management audit. MARTA, under the MARTA Act, is due for another external management audit in 2024. MARTA has to complete that audit and have the report handed to the appropriate recipients, including the governor, the state legislature, etc., by December 31st, 2024. A letter which outlines the scope of that activity that we're proposing was sent to the chair of the MARTOC committee. So we sent the letter to Chairwoman Silcox, which is the typical process. So we're waiting feedback. I must say that after reviewing the actions taken on the previous report from 2020, significant progress has been made on those recommendations, which is good news. We want to come out before the next audit with recommendations that have been implemented for the most part. So that's on the MARTOC management audit that will take place in calendar 2024. In terms of internal audit organizational updates, it's a required communication from me to the audit committee. I had to add that audit of the Employee Charity Club to the audit plan. And then the other thing that the board will see is I have to renew my licenses for the audit software that we use to manage our internal audit activities, audit reports, work papers, reporting, etc. So you'll be seeing this in the next several months. It will be an extension of our contract for another 3 years, and the appropriate amount of money that will be required to extend the contract, so something to look forward. And with that said, this will conclude my presentation to the Audit Committee meeting, and I will turn it over to you, Chairman Frierson.
Thank you very much, Mr. Zanoff. Any other questions from the board? Okay, Mr. Pond.
Emil, I remember from the 2020 audit from MARTOC, it was quite voluminous, and I recall that there were a lot of things in there I'm not sure were that important. They might even, and I'm not sure we ever got back and disagreed with some of those things, but I just recall it being a whole lot of things that were not critical and some were. So I don't know where that balance is, but are we going through and separating what's really important to run the system versus 1,000 little steps that immaterial?
I think, in my opinion, we are. And when I say we, I talk about MARTA, just kind of taking that external or independent perspective, because I don't manage any operational unit. But from an independent point of view, I do think that the authority has focused its effort where it needs to focus these efforts, even in those areas. And I know what you're referring to, that seem to be not a core part of the strategy. MARTA has things there that are pretty robust. I'll give you an example, with Power BI, which the authority has and uses for all of its data analytics and reporting of various different KPIs and metrics. It may not be what the external management auditors recommended, but it's another very robust system that satisfies the same purpose. And I think part of the art of dealing with this kind of situation is for us to articulate well what we have and why it serves the purpose, which may be a different technology, but there is more than one technology that serves a purpose. Right. And I think if we can articulate that well from a management perspective, we'll be okay. I don't know if that answers the question.
It does.
Yeah.
I'm not sure there's a definitive exact answer, but you've answered it.
Al, I think if I can just add in, Emil was briefing me on the MARTOC, on the previous MARTOC, and I had jotted down a few notes that he was able to share with me at the time. And so if this helps, Emil was saying of the 25 recommendations received back then, 9 we had considered high priority issues. 8 of them are in progress. 13 were medium priority issues. 10 of those are complete, 1 in progress. And then 3 were considered low risk, and all 3 of those are complete. So just from a numbers perspective, we are addressing each of them at various rates of closure. And Emil had, last time we talked about, this was a while ago, but his recommendation was that at this pace, we will be in a very good position when the new MARTOC audit starts to have completed everything. Even though some of them, as you said, were higher priority and some were considered medium or low.
Second question, going back to your IT findings, in the past, sometimes from a budget standpoint or from a staffing standpoint, we were running behind on addressing IT as related to cybersecurity. Are there any barriers there that you're aware of with your audit?
I'm not aware of budgetary barriers or of headcount barriers. That doesn't mean they don't exist, but as we assess those, we'll always have, and that's true for any organization the size of MARTA. I mean, unless we're a 3-person shop, which we're not. But any organization the size of MARTA, in my experience, will have findings in this area just because the technology evolves so quickly, and also the threat landscape, the bad guys are sometimes better equipped with knowledge and resources than the good guys, right? So we always have that kind of findings. I think the important thing is acknowledging and focusing on remediation of those findings, because we will have those. So, but as we go and identify those, I would not say that these were related to we didn't have money, therefore we didn't do it.
All right, any other comments from the board? I just want to add one, and that is, I know that we got all eyes on this charity club and what's going to happen. I'm sure it's going to come to a resolution, and look forward to just doing just that. With that being said, I know that we did not approve the meeting minutes from the July 20th, 23rd Audit Committee meeting due to we are short of quorum. However, we want to move those approval of those minute meetings to the next Audit Committee meeting, which will be March the 28th, 2024. All right. So we'll address approving those minutes at that meeting. The other items on the agenda were just briefings. All right. So I think that's. We did not. We did not because we didn't have enough. We don't have. We'll short one. We'll short one for that. Okay. All right. Are there any questions? Any other comments? Hearing none, then the audit committee meeting is adjourned. All right. Thank you.